Good morning to everyone. I'm so sorry I can't be with you in Nairobi, in beautiful Kenya. My name's Julian Price. I'm the Executive Director of the ACP LDC Sugar Industries Group. My presentation today aims to update you about the world sugar market. And as you'll know, the world sugar market revolves around developments in Brazil, India, and Thailand largely. I'll also mention developments in Europe because the EU, the UK, and EFTA markets are important, potentially remunerative markets for African sugar. Before I begin, I'd like to mention a few words about the ACP LDC Sugar Industries Group. Our group is indeed a cornerstone for development in ACP and LDC countries, as it says on our website at www.acpsugar.org. Our group seeks to represent 18 at the moment sugar industries at both millers and grower level, and to promote the interests of our industries in EU and UK markets. These industries enjoy duty-free, quota-free access to the European and EU markets which are becoming ever more difficult to access. ACP LDC sugar represents a declining share of the EU and UK sugar markets, as the EU and UK have liberalised their trade regimes over the years. In short, our group seeks to arrest that decline, to the extent that our members still value the EU and UK sugar markets. We aim to meet regularly with representatives of His Majesty's government in London and the European Commission and other institutions in Brussels, and with other stakeholders. We have, for example, meetings with the OACPS Secretariat in Brussels, who represent us at diplomatic level there, and possibly also in the UK. We are meeting with DEFRA on the 16th of May to discuss precision breeding, genetic modification and that sort of thing. We may be invited to the ASUC General Assembly in Brussels on the 22nd of May, and on the 24th of May we meet with the European Commission DG Agriculture to discuss sustainability and other matters of interest. And of course, we're present in social media, as well as on X. We're also on LinkedIn, and we publish regularly there to get our point of view across regarding preference erosion. Graph you just saw then on imports from Ukraine, which have been largely at the expense of ACP, imports particularly into Eastern Europe. And we make the point that cane sugar industries are often already carbon negative, according to studies both in Mauritius and in Zucker industry. We lobby against the opening of new free trade agreements, arguing that a preference for everyone is a preference for no one. And I've mentioned the carbon negative issue. But let's now turn to the world market. Imagine, if you will, a world sugar market without Brazilian sugar exports. There wouldn't be nearly enough sugar to meet global needs, and prices would have to be very high indeed to choke demand. Let's put Brazil back on the map. Phew. Thanks to reasonable weather and the heroic efforts of Brazilian farmers, hauliers, millers, railroad workers, freight forwarders and stevedores, the world sugar balance is now in surplus for 23-24 and shows promising signs of being in surplus again next year, 24-25. If you'd like to download this visual, you can do by visiting the address you see up there, bit.ly/Africa Sugar. Let's move on. Global sugar prices have reacted to the sterling performance of the Brazilian crop and to news and speculation of improved supply prospects in Thailand and India. Since last September, the number 11 ICE raw sugar futures prices have fallen from nearly 28 cents and just last week fell below 20 cents a pound. Sugar producers, sugar traders, sugar users are not the only ones to take an interest in the global futures markets for sugar. There's a fair amount of interest from the speculative community and hedge funds, those sort of interests. Until about September last year, they were around 200,000 lots, which is equivalent to about 10 million tons of sugar long. They felt that prices were going up, and ever since the beginning of 2023, they were right. But in mid-September, the mood changed. They sold their long position, and the market duly fell from about 28 cents a pound down to just over 20 cents a pound. They recovered a little bit as in the run-up to Christmas, but the hot news today is that the speculative community, as of last Friday, were 23,076 lots short, which is about 1.2 million tons. They're clearly betting that the market has further to fall. White sugar prices also fell last week, and that's the blue line on the graph there, and now stand at just over $560 a tonne FOB. With the expiry of the May number 5 London white sugar futures last week, we now move to measure the white premium from a May measurement to a July-August measurement, and the white premium has accordingly fallen from around about 140, late 140s, down to just over $100 a tonne. The May 24 white sugar delivery was quite a large one, 314,157 tonnes approximately, about twice the historical average. ED&F Man was a big receiver, along with Sukden in the Middle East, as you'll see in that chart. The big deliverers were no doubt happy that they will have cashed in on the white premium, which was then in excess of, or the May white premium in excess of $174. The Octox, for example, is now down to $120. The delivery is mainly from the Middle East, India, a little bit from Brazil, and interestingly, a bit from Poland. The first time I think Poland has ever delivered to the tape, and the first time for a long time that we've seen deliveries from the European Union. I'd also mention the backwardation of the global sugar market. It's very mildly backwardated. You can see that May 1973, on the 19th of April, March in each month, trading at a premium to the other months. So March 25, 1980, trading at a premium to July 25 at 1885, and similarly as we move forward into 2026. The main action, of course, is that in the nearby months, as you can see from those bubbles on the left, which record open interest. So open interest is the market is most interested in the July. The May will shortly expire, of course. It expires at the end of the month, compared with London, which expires on the 15th previous month. White sugar, number 5, different story. The main interest is in the August, the May having just expired, and the backwardation continues mildly until the pink months at the end of the period. Illustrate this business of contango and backwardation, in other words, the spreads, I've made a little movie which began the Africa Sugar Conference in 2023, and we're continuing now through the General Assembly of ASUG, the ISO seminar in London, Carbo Solutions in Morocco, Shinimandi in India, Sweet Colloquium, and now we've come back to, I just missed it, back to the Africa Conference today. But as you can see, the market does move, and it's all about speculation and people taking positions and the news coming out and so forth. I think I'll stop there, shall I? Okay, let's move on from prices and discuss some of the factors which influence global sugar prices. I feel sure that folks can add to this list, but here's my list. Fundamentals, technical factors. Technical factors are doji crosses and drawing lovely pictures with Eddie's crayons on charts and things. Macroeconomics, the province of finance ministries and banks and so forth. Risk appetite, the banks. The weather. We can't get away from the weather. That's a constant in life, and another constant, obviously, politics, in particular trade policy. Anyway, let's begin with fundamentals. Estimates vary widely. I take those estimates which I hear in the market from normally reliable sources for each country. These sources have recently talked up the production estimates of India and Thailand, adding 4 or 5 million tonnes to the total of global production in recent weeks, which has led prices to fall below 20 cents. Only a couple of months ago at the Dubai conference, these estimates of production were much lower, and talk was widespread that the market would go up to 30 cents a pound. Today, the expectation is that global production could reach 185 million tonnes in 24-25, after about 182 million tonnes estimated for 2023-24. Sugar production is, of course, seasonal. Monthly production ranges between about 7 or 8 million tonnes a month to peaks of up to 25 million tonnes a month. The peak months are between November and January every year. On this chart, you can maybe see the yellow bits. That's mainly India, whose crop is coming to an end just now, with most mills expected to finish crushing this season's crop this month of April. The blue bits of this chart are mostly production in centre-south Brazil, which is moving into its intercrop period just now. It's this seasonality of production globally which is one of the drivers of the spreads that we see in the number 11 global sugar futures market structure, the backwardation and contango that we saw in that little movie I showed a minute or two ago. Of course, it's the seasonality of exports which actually drives the number 11 structure, not the seasonality of production, since much production never finds its way onto the export market, but it's consumed locally or regionally. For lack of good data, we may perhaps assume that sugar consumption is not seasonal. That's not to say that seasonal factors aren't at play in parts of the world. The tourist seasons in the Caribbean, for example, or ice cream sales in what passes for summer in England. It's just that we have no good data at a global level, and so we can't measure it, and so we stick with the easy assumption that consumption is not seasonal. We also factor in population growth and GDP per capita in our estimates, and we took account of the COVID lockdowns in such a roundabout way, and the rebound from the lockdowns, and now we estimate global consumption will be about 1% or 1.5% per annum with regional variations. In modification of some of these consumption estimates, we can and we do take account of local factors, such as the insane sugar tax in, for example, South Africa, or the tragic wars in some parts of the world. But the truth is that sugar producers may know their local and sales production, sales projections, but at a global level, consumption estimates are very sketchy. Given the monthly production, consumption estimates and trade flow estimates, it's easy to calculate stock variations at a global and at a regional level. Putting this all together, we can calculate the overall global supply and demand picture for sugar. This shows that after the small deficits of 2020-21 and 2022-23, we look to be in surplus territory in 2023-24 and likely in 24-25. These estimates come with huge caveats, of course, and you should note that these estimates are subject to revision without notice, recalling that only a couple of months ago the consensus of analysts at the Dubai conference were predicting a deficit in 2024-25. You might ask, why do we bother with such statistical analysis? Well, this astonishing chart derived from ISO data, I've taken the ISO's February 2024 estimates, begins to answer why we bother with this. The chart plots the stock's consumption ratio in a scatter chart against the average inflation-adjusted US dollar ICE number 11 first month continuation prices for each October-September marketing year. Correlation is not causation, as the old adage goes. But this chart of correlation of about 75% suggests that global sugar stocks account for a great deal of the movement in global sugar prices, which we see every day in the market. No doubt other factors are at play in the day-to-day or on a seasonal basis, for example, the monthly trade flows, and of course the weather, but this chart does rather suggest that it's worthwhile to look more closely at the data. Let's do that. Let's start with Brazil. In sugar terms, Brazil can be thought of as two countries, the historic North-Northeast and the vibrant Centre-South. The Centre-South accounts for more than 90% of total Brazilian sugar production, about 41 or 42 million tonnes of sugar out of a total of 44 to 46 million tonnes of sugar. But that's only half the story. Around half of Centre-South cane is used to manufacture bioethanol, both hydrous and anhydrous, to fuel Brazil's fleet of internal combustion engine cars, vehicles which, by the way, have a much lower CO2 footprint on a lifetime basis than electric vehicles, as Dr. Plinio Nastari scientifically and eloquently demonstrated at the ISO conference last year. Let's look at the numbers and estimates of sugar production in the centre-south of Brazil. Don't worry if you can't see these numbers on the screen. They will be circulated in a PDF accompanying this video. The weather at the moment in centre-south Brazil is a little worrying, with cumulative rains about 30% lower than last year. Now, estimates could vary, of course, but if centre-south cane amounts to 600 million tonnes in 2024-25, then with average TRS yields, tonnes recoverable sugar per tonne of cane, and maximum diversion of cane to sugar rather than ethanol, about 51%, let's say, then production could be similar to last year at over 41 million tonnes in 24-25. The dry weather this year may not be helping sugar yields in centre-south Brazil, but it certainly helped the pace of exports from Santos, Paranawa and other ports to the world market. It's truly amazing that despite the odd hiccup, waiting times for vessels to load in these ports have generally remained as may be expected. Moreover, now that the huge quantity of cane, 654 million tonnes, has been processed into sugar and ethanol in 23-24, and the freight forwarders and stevedores have proved their Stakhanovite abilities, the global sugar market has breathed a sigh of relief. So let's now turn to India. Almost nowhere are estimates more variable than in India, and despite the ban on Indian exports of domestically produced sugar, accepting organic sugar at the discretion of APIDA, the authorities, and various estimates of Indian production, the diversion of cane to ethanol, and indeed estimates of political decisions, recalling that the world's largest democracy, will go to the polls this year. Events in India do have a profound effect on sentiment in the world market. The crop is not yet over in India's 350 odd mills, and there have been various fortunes in different Indian states, notably Maharashtra and Karnataka, although overall the monsoon rains are forecast to be normal this year. The weather agency Skymet, for example, forecast monsoon rains at 102% of the long-term average. As things stand, India's sugar production is estimated to be around 32 million tonnes in 23-24, not including diversion to ethanol, compared with consumption tentatively estimated at 28.5 million tonnes. Although, judging by the monthly allocations of marketing permits, Indian sugar consumption may actually be a bit higher than that. There's so much more going on in the vast world of sugar, I can't possibly mention it all in this short video. But it would be remiss of me not to mention a few other countries. Thailand has concluded its 23-24 crush with an estimated production of around 8.8 million tonnes, a disappointing outturn caused by drought and high temperatures which cause heat stress in the cane. Looking to 24-25 and noting that sugar cane is paying much better prices to farmers than cassava, favourable rainfall is so far encouraging estimates of production of up to 11 million tonnes of sugar next year. In Mexico, lower harvest areas and poor yields have resulted in a disappointing crop of around 4.7 million tonnes, which will not allow world market exports and may not even allow enough sugar to sell to the United States of America under the so-called side letter under the US-Mexico-Canada Agreement. Turning to Central America, the countries of Central America production has also been disappointing as a result of lower harvested areas and lower yields. That said, the outlook in Central America and in Mexico is looking up thanks to late rains and to better yields forecast. Finally, I'd like to say a few words about the European markets. I must say, I'm indebted to the European Commission for making a wealth of data freely available for me to make the Power BI reports you can find on my website. Prices in Europe are falling. In the summer of 2023, spot market prices were around €1,000 a tonne, perhaps even higher. But today, the spot market on an ex-mill basis is around €650 a tonne. As is well known, the European domestic markets are very opaque. In my view, the lack of transparency in the market is damaging to overall economic welfare because the opacity of the market doesn't allow farmers to plan their arable rotations. It doesn't allow industry to allocate scarce resources in a potentially remunerative way, and it's hence the cause of many investment mistakes. The EU market doesn't need to follow the world market, but more transparency would certainly help, and indeed help those in African, Caribbean, Pacific and least developed countries who rely on a stable and remunerative market in Europe. Imports into the UK are considerably lower this year than last, although the recent fall in sugar prices may yet encourage more imports from non-EU countries. Imports into the Ukraine were stalling before the recent cap of around 270,000 tonnes for 2024 and January-June 25. Lastly, stocks of sugar held at the sugar refineries and factories are higher this year than last, thanks to average yields and a slightly increased area, and also perhaps lower consumption. And now we look to the weather in Europe and pray for the rain to stop. The excessive rains have delayed sugar beet sowing by around 2 to 3 weeks, in northwestern member states and in the UK, but the higher prices last year encouraged farmers and beet processors to increase the area sown and contracted for production this year by about 3 to 5%. If the weather improves and the aphid numbers are not too bad, aphids are vectors against virus yellows disease, against which many farmers have no defence thanks to the ban on neonicotinoid-treated beet seed in the EU. And there are lots more ifs. If then, we can hope for a bit more market stability in Europe after the extreme volatilities of recent years. Well, I'll stop there. Thank you very much for listening to me on this little video, and thanks to the organisers Informa for putting on what I'm sure is going to be a superb event in Nairobi. I wish I was going to be there. I'll just say that if there's any questions, please. I know you can rely on my good friend Nick Qualek. He'll be able to answer everything. And if in the unlikely event he can't, please just reach out. You can find me on my website, and I'm sure you can find my details online. And my phone is here. Please give me a ring. Well, thanks very much, and I wish you a great conference. All the best. Bye.